the most important lesson I've learned in any of the businesses. It is a team effort. I can be as good as I possibly can be on any given day and work as hard as I am, but without the right people around me, I'm just anyone on the street, trying to get a job, right? So it's a very different environment. Yeah, your key person leaves and they're getting your competitor and you think, oh shit, my business is done, right? That's it, we're over, right? And then they leave on a Friday, Monday comes, hey, we're still operating, right? It's still going exactly the same way. And then someone stepped up from behind them and they're doing an even better job. A lot of the time turnarounds are not actually broken. They're just something where you just need to accelerate something. You need to, light a fire under somewhere. COVID happened at the same time. And I'm sitting there going, oh shit, what happens? My biggest customer is Qantas. Think about it for a second, right?
Wow.
You can't fly planes and I've got probably too much of my revenue tied to one account.
You've delivered $290 million worth of exits now, and you've turned around a company that appeared to be struggling, that was public. Just want to know, what's the biggest misconception you hear about turnarounds?
Yeah, okay.
Tristan, welcome to Flow Zone.
Thanks for having me.
I'm stoked that you're here, Tristan, and I want to dive right into a question that's been on my mind. You've delivered $290 million worth of exits now, and you've turned around a company that appeared to be struggling, that was public, and that was during probably some of the worst possible timing that you could have had for a company like that. I hear a lot about turnarounds, so there was a lot of our entrepreneurial audience, and just want to know, what's the biggest misconception you hear about turnarounds?
Yeah, okay. It was a tough time. By the way, stoked to be here too. It was the misconception that a lot of people have when you look at a turnaround is they think those businesses are really like they're out of gas. They're like not performing. There's no customers. There's nothing in it. There's no revenue. There's something really, really broken. A lot of the time turnarounds are not actually broken, right? They're just something where you just need to accelerate something. You need to, light a fire under somewhere or, work something out. And in our case, we had a really, really good business. It just was mismanaged before we took it over. So the turnaround was managing it well rather than actually having to go and create a whole new market.
Yeah, okay.
Yeah.
So what are the things that you're finding are usually broken, or not working well? What are they mismanaging usually?
Yeah. The management or executive teams are usually the starting point. Fractures down into your culture. And if someone asked me the other day, culture versus strategy, what's the most important thing? I don't actually know what I would answer. On any given day, it's something different. And not these businesses, it won't be the strategy that's broken, it's the actual culture, right? So the one that when we took over from our group and went in and moved to private, the culture was not great, right? The previous leaders had just pushed people too far and they just needed something to get them moving. So that's usually a starting point. And that leads to customers because you don't have a business if you don't have a customer. And so first thing we always did was go out, listen to your customers. It should be the leader of the business, should be the first person who's out there, not the person who lets everyone else go out there. So we found that was probably the two key things.
Yeah. I found that absolutely invaluable actually when we implemented scaling up properly. I've put it scaling up in EOS in a number of the companies I've been involved in, that we put in a presence group.
Scaling up, the Vern Harnish scaling up.
Yeah.
Love it. The best. Yep.
Yeah, the system. It's, especially when you've got an implementer that's been around Vern and Jim Collins and everyone like that themselves. The OGs of it, rather than people who just kind of grabbed the book and read it and said, I know about it. Yeah. Someone that's been endorsed.
So let me add something to my journey for you.
Yeah.
So the day we bought Arc Group was the day before I had tickets for my executive team to go on a Vern Harnish course in Melbourne, right? Scale up. And I kid you not, we announced it the day before. I knew it was happening, right? And it would have been similar exec team either way, but that was the first thing we did, which was awesome. Then we got a scale up coach and all that sort of stuff.
Yeah.
And the second thing I'll give you is that a really respected friend of mine, which is Ian Ticker, turned around to me recently and said, anyone who's read Jim Collins' Good to Great, he goes, the real winners read his other book, his next book, which was How the Mighty Fall, right? I don't know if you've read that.
Yeah.
He said, you just read that every few years and just remind yourself, you can build that great business, but this is how easy those businesses fall apart.
Absolutely. And it's so funny, the Rockefeller habits is central to scaling up.
Yeah.
And when you go through and do the test, you can't hide from the questions.
No.
They're very sobering. And I studied relentlessly before we actually implemented it because I met some guys that were around right from the start. One of them actually was involved in co-authoring the Cash chapter. And I thought, these guys are the big end of town. They're not here for bullshit. And I'm going to answer this honestly, but I really pumped hard. I had about 4 months leading up to it. I did everything I could, and the results still came in pretty low. And I'm like, all right, well, that's where we start from.
Yep.
It doesn't matter how good you think you are. Like the answers are binary, whether you do or don't have it. But when you talked about culture before, you actually mentioned a couple of quotes almost from Peter Drucker. You know, if you don't have a business, you don't have a customer, you don't have a business.
Yeah.
And, you know, the old question of culture eats strategy for breakfast.
Yeah.
But I think a lot of people use culture as kind of like a swap out term for like, let's go and get on the piss with our team and let's have a workplace where everyone's fun and joking all the time.
Yeah.
Yes, you can still fun and joke in any workplace if that is the culture. But by definition, culture is the predominant behavior of a group of people.
Yep.
So if the predominant behavior is executing on the things that the strategy calls for and living by the values that are guiding them to stay on track, then absolutely culture eats strategy for breakfast.
It does.
You still need to have a strategy though, right?
Yeah. Well, you do. So scale up is the easiest way to have a strategy, right? And you have it on a page, plan it on a page, and you just follow that, right? And what it does is it gets, like if you do it, I don't know how you did it, but we used to do monthly meetings and we'd have like a quarterly theme and we'd set that. And that actually builds the culture at the same time. So we would tie the two together. One of the ones I remember the most was a Michael Jordan movie, The Last Dance.
Last Dance.
Right? So we had one of our stages was called The Last Dance, right? And it was all based around high performance and this is the last, of this we need to do, we need to get it. And it was just, that built the culture. Everyone got behind it, which is really, really cool. But we all built the strategy at the same time. So they kind of converge.
Yeah. No, I really like it when the whole company's involved. And to answer your question, we do the full meeting rhythm like a drum beat. So it's daily, weekly, monthly, quarterly, annually. Yeah. And, various teams are involved in to various degrees. Like the dailies they're a quick stand-up meeting, but the whole organisation can have it. Yeah. But a lot of people don't really think about, like, the quarterly is great to set a theme, but then you need to have monthlies and weeklies to keep things on track. There's no point if you're not keeping score. Yeah. And, at first people feel a little bit micromanaged by it, but then they realize you're actually helping them develop what they've already asked for and they're good, especially if their values align. But like a word of warning to any listener or viewer here, when you bring in entrepreneurial operating system, scaling up, or any kind of operating system that brings results out in front, brings culture out in front, makes things measurable, you will undoubtedly get pushback, particularly from those that are less aligned to your values. And it probably means some of them are going to leave. Now, you'll learn in time, it's ultimate that, you end up with people on the bus that are kind of values aligned and performing, but it's really hard when it's happening because like the typical thing is, is this working? Are we pushing too hard here? But stay with it.
And a lot of leaders are afraid to actually say, this is what's important to me, right? So, this is the impact I want to make. This is the main thing because they know that people will leave. Like, if I went out and said, my most important thing in the business is that everything is red, right? Someone like blue, you're going to lose the blue people. Yeah. But there's no one you can ever lose in your business that's critical to your business, right? That's the way I always say. With early days of startups, your key person leaves and they're going to your competitor and you think, oh, shit, my business is done, right? That's it. We're over, right? Pack up. Let's go home. And then they leave on a Friday. Monday comes. Hey, we're still operating, right? It's still going exactly the same way. And then someone stepped up from behind them and they're doing an even better job. And you just don't see that. So, so you got to have your culture.
What do you think that is when that person leaves and you think the world's over? Why is it okay?
Just you're just used to the consistency of that person, your comfort levels, right? People don't like to be pushed out of their comfort zone. So they got someone they rely on. I actually like it when a good person leaves because what it does is someone does come up from behind, but then whatever, like someone's been guiding your business in a direction, that may or may not have been the right direction, right? Yeah. So you get fresh minds, fresh thinking, right? Too many times we pay consultants to come in and do that or someone external to come in and do that. But, sometimes you just need to shuffle the deck chairs a little bit or the seats on the bus.
People in the right seats, exactly. Still the right things. Yeah. I love it. Well, talking to the more early days here, so what a lot of our listeners and viewers might not know is the business we're talking about is essentially the first business that you grew. Well, the first notable business, it was a $35 million exit for InfoReady. Tell us how that all went down.
Yep.
First.
That's right. So InfoReady, I mean, that was the first startup. Well, not first startup business I had, but the first successful one that I had. And it started with me, right? One person got a contract with Telstra because they loved what I did in the data and analytics space, got a mate on board, and then just slowly we built it up from there. And that was really, and the first 3 people on the business ended up being the 3 partners because the other 2 came on as partners. Maybe not the first 3, but the first major guys. The first guy definitely. And we're stuck together the whole way through to the end of the arc story, right? So up until recently, that's 16 years together. So we started that journey. So we built that business out. It was at the end of the GFC. Data was kind of seen as a critical asset to businesses, and no one had ever really realized that before, and people didn't know how to get access to it. So that was our market. So that was the AI of today was data in 2008, 2009. And we jumped in and did that. And we just built up really quickly a good reputation. Yeah, we hustled. We went and got every customer we knew. It's an industry I've been in before as well. So we kind of really worked really hard at that. Built that out, got that to about 150 people. Exited it in 2016 to Melbourne IT.
Yeah.
Later became Arc Group.
Yeah.
And that was really an interesting point as well, because we didn't think the business was done. So we kind of said to them, whatever the deal is, we need it to be accretive. So we want to take more money later because we know this business is going to grow, but we need someone to help us grow it, which is why we went there. And I'll never forget, because two funny things happened. Was our advisor at the time said, mate, cash is king. Don't like what you're trying to do is stupid, right? Right. But 3 years down the track, when we've highly exceeded his thresholds, because you have like a cap. It's like, if we exceed over this, right, this amount, you got to pay an extra 2 or 3 or 4% or whatever it was.
Yeah.
And then we get a bill for that. One of my partners goes, but I did nothing to get there. I go, the deal we got was unbelievable. So we actually, from the first check to the second check, it was almost double of what we got. And that was us backing ourselves. Like, no one would care if I turned around and said my deal was 14 million. It's like, whatever. Yeah. Sell a house for that nowadays, right?
Yeah, pretty much.
Sydney, it's an apartment. But to get it to 35 was good. And then we rolled into the next piece, which was the Melbourne IT piece, which was a 3-year journey before I got catapulted in as a CEO, and that's where the Arc Group part starts. So it's all been together. So we technically say we've bought and sold the business 3 times, because we sold InfoReady to Melbourne IT, we sold Melbourne IT to ourselves, and then we sold the Arc Group to NCS, which is part of Singtel. So I've got there. So
what was it like going from, dealing with essentially we're a garage startup, or, bedroom startup, home startup, to, okay, we're now selling to Melbourne IT. Now we're at a bigger price pool, multiple 8 figures. Yeah. Now there's a public company and the Singaporean government involved. Yeah. What's that step up feel like?
Yeah, well, the Melbourne IT step up was bigger than the second one into Singapore, because you've gone from being private, held, small, and then public, all of a sudden is so different, right? So the smallest little things, like our office before we moved, right, was like an open techie place where tech startups have been, right? Yeah. And we moved into a corporate office. And I just remember, because one of the parts of our plan every year was rent, and we're like, we don't need much rent, right? We just need a nice big warehouse. We all sit around and code. But theirs was like 5 times the size, because we need big offices, we need fancy stuff and all that. So the culture was a bit different, and you go from being the ultimate leader who can be very open and transparent with the team. Yeah, especially transparency in a public business is really hard, because if I disclose something to someone in the business, I didn't have to disclose it to the shareholders. Yeah. There's even times where I can't even have a conversation. Like if I'm thinking something and I tell the chairman, right? Yeah. Or I tell anyone on the board, they have to disclose what I'm thinking basically to everyone else, because that could or may not impact the business. Right. And we had we not me, but previous leaders had found that out. So it's just very different. You just can't share anything. I operate on transparency. I love transparency. I love everyone in the business to know what we're doing and sharing the vision. Which is good, but in those markets, there are times you can do it. You just can't do it all the time.
Yeah, okay. Yeah, I had considered that before when I'd been dealing with public companies, and I'd been like a guest that had come to one of their development days, like someone like REA Group, owns all realestate.com and everything along those lines, and you're signing NDAs on the way in. And I really thought it was just about the information that I saw, but it's also about the things that they tell us. And just those side conversations. But I always noticed because I had the privilege of getting to meet the full C-suite and the chairman. And that was pretty cool. 2 separate CEOs. But every time we spent, casual time together, it was interesting. Like they'd ask me a question, I'd share my thoughts, and I'd share one backwards. And you could tell that they were kind of answering it, but they were not saying everything. And not because they're wanting to withhold, probably because it's just in their blood to be, proper in that way.
I never thought about it when we sold to Melbourne IT. It's like, we had 2 transactions going, right? One failed and it wasn't a public company, and this one was a public company. I never actually thought about it at the time. It was about the culture, the people, whatever. And I didn't think, well, what does it mean to be in a publicly listed business, right? It's just different, right? So going in as a CEO, I mean, that was eye-opening. I remember sitting down with a mate of mine who's a CEO of another public company, and I said, tell me everything I need to know about being the CEO of a public company. And it was all around disclosure and, keeping quiet, basically. Not keeping quiet in a bad way, but just being careful. Just don't be too open.
Yeah.
Because then you're going to have issues come up all over the place. But, still keep the transparency with your shareholders and everyone else, because you have to, right? That's your obligation and governance. But, sharing your thoughts and ideas are good, just within a context. So,
I get you.
Yeah.
So that exit would have felt pretty big, I imagine, at the time.
Yep.
35 mil.
Yep.
How did you know it was time to sell?
It was kind of time to market where I thought to get from where we were, call it 150 people, to get to like 1,000 people. That's a huge risk. And you build something up. And at that point in time, I'm like, I was 36. I was pretty young. And I was kind of looking at it and go, well, if I exit now, I got 1 or 2 in me.
Yeah.
Right? If I push it out and try to get to 1,000, that takes me 10 years and then the whole thing falls over. I don't have much left behind it. So I was kind of interested in that. A lot of the similar businesses to me had been selling.
Yeah.
And so I thought that was a really good opportunity to kind of, cash in some chips and see where we go. But more importantly, I wanted to see the business grow, and I just thought I needed a partner to do that. And work out how to do it. Like I'm advising a business at the moment, and we're looking at the same thing, similar size, all that sort of stuff. And I'm like, well, now I know the world. These are the types of people that I would look for. And in our instance, we're looking at public and private and private equity and all that sort of stuff. But that's probably the key. Like it was just time. It's good business. You want to sell at the top of the market if you can, not at the bottom.
Yeah.
You get lucky sometimes. Yep.
Timing definitely plays a factor.
Huge.
I was talking to a friend of mine owns a big media company, like advertising agency sort of thing, where they've got corporate clients, global clients, and having chat to him about they're buying again, and you hear the multipliers start dialing up. And you think when those multipliers of EBIT or profit or whichever type of business it is, when they start going from like 5 to 6 to 7 to 8, and then they're nudging 10, for a type of business, and you could extrapolate that to any other type of business for what the multipliers are, it must be pretty tempting, I suppose, to start thinking that way. But how do you not think that way when the market's running hot for buy and you're still in the middle of a build?
There's a discipline around that. You've got to know your business is ready. Like 2 things will happen. When we a year before we sold, we try to sell it to someone else, and our advisors, like what we thought our business was like, when an advisor looked at it, this is the first time I had any experience in this. They looked at it and they're like, it's not as good as you think your business is. These are the things you need to do. So we worked on that for a year to get it to that level. The other thing is you don't want to cash out too early. So we had a good earnings accretive deal. So we knew we would have cashed out too early if we just got out in that first, at the beginning of the deal and not had the deal over 3 years. But a lot of people just kind of say, okay, well, if I can get, round number, if I get 10 million today, that's awesome. Pays off the mortgage, school fees for kids, whatever, a couple of nice holidays. And then you look at it and go, but actually in 2 to 3 years' time, this business could be worth 100.
Yeah.
Right. So it's having a discipline around knowing where you cap out at your capability. And you want to time the market too. Like if the market's hot and you're going to get a higher multiplier, you might go a little bit earlier. But when the market's hot, they're going to take businesses that are a bit more raw as well, because it just means that there aren't as many opportunities out there, and they're scrambling to get stuff.
Yeah, that makes total sense. Like supply and demand does some funny things.
Huge.
Especially when there's a big sort of VC or PE firm over the top saying we need to hit a certain number of investments so we can keep our investors happy, because they've got to spend their money.
Yeah, I just worked on one recently and the multiplier was stupid, right? Like it was like, and this is a genuine EBITDA multiplier. And I'm working with a PE firm and at the end of it, I'm like, we all just looked at each other and we can't sleep at night. No, this is a like if we buy it for this, the chance for us to actually make money off it is impossible. So let the other person do it and let's see how they go.
Yeah.
And that's what happened. But yeah, there was like a cap out. It was like we added 1.5 of a multiplier, they added 0.5. It was like a bidding on a house. It's like, $1 million, $1 million, 100. It was like, it was going up like that. It was quite crazy.
Just still going.
Yeah, it probably is.
So like we've got some big lessons out of this section alone. So like for you knew the business was heading in the right direction, but you just didn't have the kind of firepower to take it to the next stage, but you knew it was capable of it. Mm-hmm. You chose to do an accretive deal there based on earnings so that it's over 3 years instead of a single exit point. So you can get into more upside as long as you stay in front of what those hurdles are on revenue or profit or whatever the metrics were that they were looking at.
Yep.
And having some discipline around your timing is pretty important. So a lot of our listeners are sort of 5 to 10 mil businesses, like from the ones that have engaged with me directly. What would you say to someone that's at that messy stage right now in relation to exits and thinking about the next move?
Yeah, I think there's a couple of things. People look to buy your business. It's the maturity of the business. So when someone turns up and they've got, and I've seen this all the time, they've got everything's everywhere. Like, yeah, what's your invoicing system? What's your HR system? And I'm not talking big corporate systems, right? Yeah. There is, we had some of the smallest, $5 a month sort of systems, but being able to show how your business operates is really important. Understanding and being able to demonstrate it. So business intelligence or reporting on businesses. Like we got super young, our wellness clinic, and it's one site and makes a lot less revenue than we've made on anything before, right? As partners, but the analytics on it is unbelievable, right? We know every marketing campaign, we know every customer, their return rates, and all the information. So if someone's looking at that, they would say, okay, well, you guys know your business, so we trust you can grow the business as well. Yeah, and we can continue it from a growth perspective. But if it's a bit messy in there, and you just don't know, like I've seen businesses where we might have an enterprise bargaining agreement with 5 staff, but we might not. And I'm like, geez, there's mess everywhere, right? Yeah. So it's keeping it nice and tidy and organized. I think that's number one. So it doesn't matter what size you are, get that in order, and then you can start looking to sell. And then the other thing is the discipline around earnings. Like you might be a 5-10 million turnaround business, but if you can make a good profit off the business, that's what people are investing in. People forget that. It's like, what are they investing in? They're not investing in, they might be investing in the next big AI startup idea or whatever. That's VC. But if you're looking at something that's a business, you're going to put your money in so that you can return, a bigger capital out the other end. So they want to, make some money off it. Yeah. Just like you buy a house, right? You buy it to live in, but you want to buy it for future profit.
Yeah, the fundamentals, like it's surprisingly refreshing to hear someone talk about how important the fundamentals are. And a lot of people I've talked to that have been involved in PE, private equity or public markets, they really go to the boring stuff first. Yep. And so many other people are interested in what's shiny, what's new, what's patent, whatever. But then you ask them a basic question about that. Look, show us some business insights on your customer retention or, what's your CAC to LTV ratio or, just what are you doing to improve your gross margin at the moment? And they can't actually answer it. Yeah. They're just talking about where they're heading. It's kind of like that visionary sort of like out there trying to raise funds, but it's not going to work that well with people that are raising funds for a living.
I love it. But I love when people celebrate the success. I hate when people celebrate the investment. Right? So I've invested in so many businesses. I was at one of these ones once where we invested in a business and the guys took us all out for beers and we went out and they're celebrating and everyone's cheers, we just got the investment off you guys. I'm like, walked away from there and go, shit, we should actually be celebrating when that thing sells, right? Exactly. Not the fact that I've just given you my money, because it wasn't an exit point for them, but that was a legitimizing point for their business. But the fundamentals are critical, right? If you can show it's a business, doesn't matter whether it's a milk bar or a high-end tech business, you don't know the fundamentals, right? It's too messy for someone to get involved.
Yeah. Well, there was an interesting point in your journey I've heard you talk about. So September 19, 2019, you became the CEO of ARC Group, ARQ, which is a public company. And then in early 2020, you split it in two to sell in different directions, if I understand that correctly. Walk us through that decision and why you broke it down that way.
So the original Melbourne IT was a domain name business and websites. So their customer base. So the reason we split them up was customers, basically. That was probably the number one reason. The customers on the left side, which was like websites, domain names, etc., were really in that small to medium business space.
Yeah.
And on the other side was on the enterprise space. So one of the previous board members said to me, when they bought our business, he goes, I think these two need to separate at some point in time, right? The different investor pools. So the people that were investing, so probably one of the main reasons that the share price collapsed was because the people that were investing in our business were, superannuation firms, pension funds. It was a very stable business, Melbourne IT. If you buy a domain name and you probably got 5 or 6, you never think about where you're renewing them.
I wish I only had 5 or 6. I collect them like bloody football cards.
Yeah, there you go. So, but you probably don't know how they renew. And do you care for an extra $1 here and there? It's a pain in the ass to move, right?
Yeah.
So that's a good business. So every year it grows.
Sticky recurring revenue that can work without me.
Yeah,
it's pretty much inflation adjusted.
Exactly.
Adjusted.
And just say you didn't sell one domain name for a year, you're still going to make similar money, right? You get rid of all your stuff and you can capitalize on it, right?
Yeah.
So that was half the business. So that's the customers on that side. On the other side, our customers were, NAB, ANZ, Telstra, BHP, all the big boys, right? All the big people having businesses, and they have a different level of how you manage the customers. So the previous CEO thought, we'll put it all together, we'll run one customer team, right?
Yeah.
So, if I'm sitting in Manila and selling someone a $9.95 Microsoft Office 365 account, and there's, another person over here, he's selling a $16 million app to Suncorp, right?
Yeah.
It's like, slightly different, right?
Yeah, it does seem like a different kind of shop.
But more importantly for us, it was how we worked with the customers. So when we split it, we thought, okay, who's going to invest in each? Because they're different investor pools. It was just confusing. Like one of the other reasons for the downfall is we had some big projects that finished. And we had a lot of people on the bench, right? That's an enterprise business problem, right? You don't have people on the bench in a domain name and website business.
Yeah.
So it's kind of shuffling that around. So when we looked at the market, we actually wanted to keep the part that we bought, the enterprise business, we wanted to keep that public. And we thought, because that's a bit we thought had the greatest amount of value to be added by us as a team and to the shareholders. And the domain name business was probably worth the most.
Yeah.
But the interest came for the enterprise business more than the domain business. And we ended up selling both of them in the end. But, and we were fortunate to be able to buy the enterprise business, which was good.
Oh, yeah. And buy it well.
Yep.
So when it comes to, growth, you partnered with Quadrant Private Equity, I believe, and, to buy the enterprise side. Now, a lot of founders avoid private equity for one reason or another. They might have overheard some things about it or just not really understand it. How come you ran towards it?
I had a good advisor, firstly, who suggested it, right? And that was my first experience with private equity. So my view of private equity and a lot of people's before that was this some American sitcom with shiny suits and 20-year-olds running around with checkbooks and telling you what to do, right? So the first thing we did was we thought, well, we needed to raise some capital. So it's either private capital or our own, right?
Yeah.
We actually got it for less than we originally thought we would have to pay. So we needed a bit more money.
Yeah.
So went out to the private equity market, went out to private capital as well, went out to other places to try and work out how we could raise the funds. And we did, I call it like speed dating. I had 6 private equity meetings. I remember I was in Sydney, 6 of them, one after the other pretty much in succession, and sat down with them. And there was only one of the firms that came through and I'm like, yeah, these guys aren't. This is your typical, like what you see on a sitcom. They're like, oh yeah, we got a CFO who's going to run this, and the CEO is going to run this, and the chief operating officer run this, and sitting in front of him was our CEO, CFO, and chief operating officer.
Yeah, it's like great.
Oh yeah, we'll sell you our business, but you're going to kick us all out, right? Yeah. And they knew nothing about our business. But when I sat down with them, the conversations were really enriching. Like we sat down. And comforting for us too. They're like, oh, we've seen this. This is how it's all been done before, right? This is exactly what we need to do. Here's the plan and this is what we need to do. And I was worried about the right people being involved because, you don't want people telling you how to run your business. So if you've got a private business with a board or a public business with a board, the board gets involved. They're there for governance and they're there for advice if you need them as well. In private equity, I think a lot of people will think that they're just going to come in and tell you what to do and direct you around. It was completely the opposite for us, right? So we firstly went in and we found the people that we thought we could work the best with. And at the time, there were a few of them, and then Quadrant became the front runner, and it was personal relationships. So like, we could work with these guys. And it was not like anything I would have thought, right? Like, it was a very collaborative team. Yeah. In fact, we had one guy in the team who was an actress, and we had him come involved because we're like, oh, we can't analyze this really well, and you've got the best skill sets for it. So can you come and do this for us for like a couple of weeks? And he did, right? Wow. And he was also on our board, right? So that was the level of it. But yeah, I dispel anyone who thinks private equity is a bad thing. I think it's brilliant. There's a lot of capital around in Australia at the moment, so it's a great opportunity, and they know how to grow businesses. So you mentioned at the beginning, we bought our business, so the COVID happened at the same time, right? And I'm sitting there going, oh shit, what happens? My biggest customer is Qantas. Think about it for a second, right? Wow. You can't fly planes, and I've got probably too much of my revenue tied to one account. And we're like, worrying about, can we pay bills and stuff like that? And they knew exactly what to do. They had a business continuity plan in place across all their businesses and how they fund them and what we do and all that. And we came out better for it.
Yeah. Oh, brilliant. So
lucky to have a big brother then. Yeah.
Yeah. Well, you've got a good PE story. And look, my experience with it's been pretty solid too. Like, I got in Australia's first real estate industry venture capital fund in 2016 and called PyLab. Yep. And I'd had involvement in prop tech investing prior to that. I was consulted a lot for advisory board engagements, and I was suggested by a lot of people to get involved in this advisory board, but I had to be in the fund to get on the advisory board. Anyway, I ended up sort of getting into it, spent more money than I wanted to get involved in the investment, and then I tripled my investment once I was in there because I saw the due diligence. Yeah. Like, I literally no, I've got to go all in on this. And then I got involved in the second fund, which is a serial acquirer, much closer to the kind of PE vibes, where we're acquiring businesses, we're keeping them, everything's going back in like the Constellation software model. Yep. And the care factor that I've seen, and they've formed a CEO council around it now. So all of the significant investors that are involved in advisory capacity, we can also go into a business now and give them advice and mentoring. And I really do think that there's a high degree of care factor there. A lot of diligence, obviously. They've got a mandate of what they need to deliver. But I think it opened my eyes up, and your story just sort of reinforces that. And I think the eyes wide open suggestion that comes with it is get your business into good shape and get some advice before you go and have the meetings.
And understand what private equity want out of it. What's their intent, right? Yeah. They want to buy your business and they're going to sell it in 3 to 5 years for 3 times money or more.
Yeah.
Right? It's pretty simple. So if you're going to sell them a business that's not going to get there, you're going to have a shit experience. Yeah. Right? It's going to be tough. But if you've got a business that's going to get there, you're going to have a great experience. And that's why I kind of say to people, if you're worried about it, it's probably a reason. Yeah. Right? If you don't think your business can scale, then don't go to people who are going to scale your business.
Yeah, it's challenging too, because like I think, I've seen this with Presence Real Estate Group. We've been almost double the size when I had the full ecosystem built out. But now that I'm a founder with the C-suite in and, I'm doing roadmap, scaling, capital allocation, which we're doing our own at the moment. But, we've almost halved our revenue getting it ready for scale because we've grown the business to that. But when you look at it, if a founder's running around sprinkling their fairy dust on everything all the time, they've got clients calling them direct, like you're handing stuff off, you're solving things for people, that is not a business others can invest in. Which kind of means like, am I really investing in this for the long term as well, or am I just going to do this until I'm cooked? Yeah. And I think a lot of people are exiting when they're cooked and then like, I deserve more than this because of my sunk cost fallacy of how hard I've worked. But if you haven't been working in the direction of what an investor needs to buy into that business and take it to the next level and give it that life, then that's a choice that's been made. And sometimes you've got to go backwards a bit before you go forwards again.
And there are models where people just hand over the keys, right? I've got a friend who sold a business. He handed over the keys and it was like, here's your business. 3 to 4 months, I'm done. Yeah. And that was it. He was cooked with that business and didn't think it could go. So he found somewhere that that will grow that business, but or value it. But you take a different price for that too, right? So you take the high dollars and the earnouts and everything because you're coming along for the journey. But if you need to get rid of something, that's a different model, and people do it all the time. But it's you wouldn't sell that to a private equity.
Yeah, it's a different setup. I did see something in one of your conversations about, it might have been on LinkedIn, and you mentioned the culture that you brought in to the business when you were really scaling it the most, when you were CEO. You brought the culture of an enterprise business, but then you also made sure that there was a customer obsession. What does that look like in real life?
It gets, so that leadership team, like we would actually get customers in to brief us, right? So firstly, so when I talk about customer obsession, I think you've got to look at it, and there's so many people that have all these different, could be altruistic views around whatever they want to do in the world, right? It's like we want to make the planet greener or whatever. That's great, right? You can have all those different things, but we got to say, well, what are the key things? So for us, customer obsession meant people that actually cared about the outcome that they delivered, right? So if you're delivering and some of the solutions we're delivering, they're critical, life critical ones. Like we get Fires Near Me app, right? It alerts people when there's fires coming to your house because it's got no radio signal, like stuff like that. Like it's really important stuff. So we had to have people really understand that. So the greatest thing we did was at the beginning of every board meeting, we would talk about our impact value and our customer and what we had done for customers, right? Yeah. So I used to joke about it, and still to this day we do, right? We talk about it in that we would sit in front of a private equity firm before a board meeting, and the first thing I'd always talk about was a customer experience and how we've made an impact in the last month. And you'd sit there and go, well, most people would say, well, private equity, that they could even care about that. But that was because that's what we did. Every meeting we talked about a customer experience. Everyone knew that that was what was the most important thing. The previous leadership in our team, like the CEO wouldn't have met half the customers, right, on the enterprise scale. We made sure everyone met every customer. So we looked at people that had been in that environment before. We'd constantly be polling customers, asking for their advice on stuff. Take them on the journey too. Even when we bought the business, like I was speaking to people like, do you think this is the right thing for us to do? And they're like, yeah, these are our big customers. They're like, so, they're a part of the journey as well.
Yeah, that's good.
Part of the family.
Especially in that enterprise tier. Like, like you said, you can have some of those that they've made a big commitment. There's a lot of people who put their name behind you when they engage in a B2B transaction. Like there's 8 or 9 people in that decision, and they're all kind of got their heads on the block if it doesn't work out. Yeah. So they are very much on the journey, even if they're not tied directly to the upside. Their reputation is, the livelihood of their own company is.
Yeah, and we've seen that. We bought a business. I'll never forget going down to Canberra to meet with one of the customers just to do a bit of a reference. And he turned around to me and said, well, if you guys come in and you change anything about this business and take any of my key people off the account, he goes, I'll not only cancel your projects, right? He goes, I'll tell everyone in Canberra not to work with you. And I'm like, shit, like this is a tiny little business, right? But we honoured it. Like that's what we do. Like you got to think, like sometimes the best time to actually talk to people is in those situations, or in a moment of crisis or whatever. It's really good to get them involved, but you listen to them and you action in it on what they talk about. It goes a long way.
It's one of the best ways to build trust. Just do exactly 100%. What you said you were going to do.
Yep.
Even if it's just calling someone back.
But generally in life, I think if you say you're going to do something, you do it, right?
Yeah.
And sometimes you fail or whatever along the way, and you should be scared to do that. But just following through with your word is always kind of critical.
And look, I'll add something to that. And this is one of my sort of real personal integrity markers. If I'm going to fail to deliver on a commitment that I've made, regardless of the circumstances it was made in, I need to signal to the people I've made it to before I fail.
Yeah.
It's like a profit warning in a public company. I think it's just fair. Then you've got an opportunity to see how much it still matters to them, whether you're actually cancelling every date night that you've got for the next 6 months to fix it. Like those sort of things can happen. But if you signal it in advance, there's nothing worse to me than when someone's been given something to do and then after the deadline's passed, they say, no, I didn't get to it because. And it's like, well, it doesn't even matter what the reason is now. It's impossible to go back and fix it. Yeah, and to me, that's a big breach of trust.
It depends what you're delivering too as well, right? Like if you're delivering someone that's critical on time, you tell someone early, they're going to help you. There, right?
Yeah,
let's
do it together.
They're going to do something. Yeah, it's a team effort. And that to me is probably the most important lesson I've learned in any of the businesses, right? Is that it is a team effort. Right, I can be as good as I possibly can be on any given day and work as hard as I am, and work myself into the ground. But without the right people around me, I'm just anyone on the street, trying to get a job. Right, so it's a very different environment, and I love that. Like I just love the whole team aspect of it and the dynamic of it, and talk about scale up, stand ups every morning. The best 15 minutes of my day was meeting with my team.
Oh, how good is it?
And there were some days where, we would just joke about how long I was in the ice bath, or someone else would talk about fishing or hiking and stuff like that. And we're like, we've got nothing to talk about. We just want to catch up, right?
Yeah.
So
it's only a minute each.
Yeah.
So that's why it's a stand-up meeting, right?
Exactly. Sometimes a few people dominate. But
there's
always someone.
That's where you need that.
There's always someone. Do we really need to know how big the fish was? Like,
exactly.
There's some serious stuff going on here, but yeah.
It's still growing.
Yeah.
Speaking of team, we chatted before and you mentioned that you wanted to help the team and you choose your own adventure by basically picking the buyer who was going to buy your business and then finding out the critical markers that they were looking for and getting on that journey together.
Yep.
Choose your own adventure, choose your buyer. Explain how you did that and involve the team in the process.
Yeah, that's probably one of my favorite things that I came up with in the business. And then we took it through scale up as well as the team at the beginning. But choose your own adventure was really about, if you look backwards, I was at this course in Seattle University, Washington University in Seattle, and one of the key Amazon execs spoke to us and said, before you start a business, write your press release. So your press release is Arc Group sells to Singtel for $290 million, and the reasons I bought it is blah, 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 blah. Write your own press release before you start any business. And to me, that was me choosing what we wanted to do, right? So that was in my mind, and I was talking to the team around, if I'm going to sell to someone that's going to want to buy this business, we're very people dependent, right? They're not going to buy the business if people aren't on the journey. Particularly private equity come in, they buy into business with you, and people know the business is going to sell in 3 years' time, right? Or 4 years or 5 years, right? So they have to be on the journey. So we sat down and we said, this is what we're going to do. And we were very transparent about everything, right, in the business. We kind of went to flip from being public to being private.
Yeah.
It's like all of a sudden, it's like you can't talk about stuff. And it's like, check out our P&L, everyone. This is really cool. Right? We had someone once ask me, is it good to make a profit? This was in front of like 1,000 people. And I'm like, explain, we don't make profit. We don't have business. We're not just lining our pockets with cash. You're actually lining all of yours and making sure we can sustain our business. But so we came up with that idea, and then we kind of sat down with everyone and we said, where is the best place to grow this business? Like, what are we going to try and do? And we all agreed Southeast Asia was the next market that we needed to get into. So then we scoped the market and we said, well, who's in Southeast Asia and what are the cultures that work best with Australians, right? And we got it down to kind of 3 different regions and started talking to people. And I knew people at NCS and Singtel, and I knew the organization, and they just have such an awesome business, right? And when I went over there and visited their campus and all this sort of stuff, I'm like, how cool is this, right? Like, it's really like what we do. So we kind of, like, no one knew who the buyer was, but we knew who the type of buyer was.
Yeah.
So we knew that's what we were looking for. So towards the end of the deal, before we even got to the sell point, we're probably 6 months off putting it on the market, I reached out to him and I said to him, are you interested? Like, you've been keeping a close eye on our business. These are the reasons our business is perfect for you. And everything that we did was in line with what they did. And it was executed almost to the press release. So the press release was written by us. That was our choose your own adventure. And we went and did it. And we kept giving people progress updates of how we were going to the key metrics that would get us towards that point. And then we go and sell it.
That's great. Well, giving them the key metrics is exceptional as well. So did you consider any, options plans, stock options with your team or anything like that in this process?
Yeah, we did. I think we had about 22 people in the business that got something out of the deal. So they're either on a equity program, and sometimes you bring people in late. And this is the other thing as well. A lot of people in businesses think if you don't allocate equity to someone, and you've got to build your reputation around this too, and trust and stuff. So we'd exited before, so people have been paid. But as you exit, you give people something for coming on a journey. So if someone came in a year before, but and they weren't on the equity plan because they didn't come in late enough, all this sort of stuff, early enough, then you give them, you show gratitude. You do something.
Yeah.
So we had a pretty good team of people that did quite well out of it.
That's really great. I love those stories, especially when the teams come along with it.
Yeah.
You're a guy who likes to optimize yourself in your spare time, and we share some common traits there with saunas, ice baths, cryotherapy. I reckon there'd be some red light in there somewhere.
A lot of it.
Your wife calls it an obsession, not a passion. What's driving this for you?
Yeah, when I turned, so there was 2 points, right? Once when we were selling Melbourne IT the first time, I got really sick and I worked myself to the ground, right? In fact, I did a few of the later days of the deal actually from a hospital bed.
Yeah, wow.
No one ever knew about that.
Yeah.
To me, back then I was like, that's a sign of weakness, right? And I was also approaching 40 and I thought, everyone was like, what's your midlife crisis? You're going to go buy yourself a Porsche, a Ferrari. What are you going to do, right? I'm like, midlife? Shit. Is that where I am? So a good mate of mine, Nick Bell, and I were kind of talking about it. He was really into it. So we kind of explored stuff in the US and all that sort of stuff. And I got into it. But the first thing I got into was cryotherapy.
Yeah.
And I found this place in Bentley. It's not there anymore. And I just loved it, right? It was the first little thing I could do. I mean, I started getting healthy, eating well, all that sort of stuff, doing my bloods.
You look at $1 million now, mate. Yeah. Well, more than $1 million, at least 290.
Not $1 over it. And the two of us went across to the US and we got tested head to toe, literally, I remember sitting on the plane and going, shit, we're going to get a cancer test. Are you ready? How are we going to react if we find we got a gene that's or something it's going to cause cancer? And we're like, we didn't even think about that, but we just jumped in head first. And I got into it. And then it becomes one thing after the other. You test your blood markers. You need to improve this. You need to improve that. And then that leads to something else. And then it's like, oh, now I can test my glucose by wearing a glucose monitor. And what if I fast with a glucose monitor on and all this sort of stuff? And it kind of gets to that. I'd say now it's a routine.
Yeah.
Right? So I know exactly what I do and I know where it is. We used to call it a citizen scientist. So, and now with ChatGPT, it's even easier, right?
I know. Yeah. Look, the thing that often gets me down about specialist appointments is how long they take to get and the limited time you get to even explain the scenario beforehand. And look, being kind to them, they're brilliant at what they do, but they really have to be chunking stuff down to be seeing you in a 15 to 45 minute slot. But now we've got tracking devices. You've got one on. I've got the Aura Ring on. Yeah. The data we can get, but then I'll just screenshot it and I'll put it in my Health Mentor app that I've in ChatGPT that I've set it up with all the mentors. And I'll just say, look, how do I move this needle? And the fascinating thing about it is for me is what gets measured can be improved. Yeah. So I can find levers for just about anything I want to improve if it matters.
Yeah. I mean, the caveat to that is obviously if you find something major, talk to your doctor or someone about it. Talk to a professional about
absolutely.
it. I always say that because I remember I've got a brother who is a doctor.
Yeah.
I put something on Instagram once and he goes, you do realize that what you put on there significantly reacts with this particular illness and drug. And I'm like, oh shit. So then I put, subject to disclaimers and stuff like that. But ChatGPT is awesome because you can download a textbook. Right, you can read. I don't read a lot of these wellness books. It's a hobby as well as an obsession as well, but it's now just part of my life as well. And you can download the book, you can put it into your Health Mentor GPT, and you can then put in your blood works over time, and you can say, what does Peter Attia say about my blood works or whatever, and it's going to read the book for you and tell you exactly what you should do. And I'm like, wow, right? That's pretty impressive, right? And you do, so many people are to Dr. Google for, different things.
It's cross between a triage discovery call and a maybe consider plan. It's definitely doesn't replace the pros, but it gets you moving in the direction of it because I feel like we've seen doctors as someone you go to when you're sick. Whereas I feel like we're in a world now where we want to optimize from where we already are at. So it's not a case of getting to a point where we feel like we need to go and see someone. It's what's the gap I'm chasing here and who can help me get there?
And there aren't that many doctors out there that are, kind of preventative, right? So finding them are hard. So you go to a doctor and I've got a lot of friends who are doctors and they're like, well, we're trained as a gastroenterologist. I'm trained as a heart doctor, a cardiac, and whatever it is, right? They're trained in a particular area. So they don't know all the other stuff because that's not what they focus on, right? They're focused on being the best heart surgeon possible and not deviating from anything or you kill someone, right? Yeah. And they've got to get it right. Fair enough. We're in a country where if you get sick, you're pretty lucky because the Medicare system and the doctors around here are unbelievable, right?
Yeah, especially Melbourne, wow.
But it means there are less people focused on the other side of it, like how to prevent getting sick in the first place. And that's changing over time, especially with the advancements I read this morning. And I was actually in Dubai a few weeks ago at a Health and Wellness conference, but I read something more on it this morning about genetic alterations, right? So being able to turn a gene on and off, doctors, specialists, they can't ignore this. Someone comes in with cancer, well, shit, there's someone in Mexico who can create a virus that goes in your body and turns it off. It's like, wow, that's cool, right? Expensive at the moment, but it'll, give it 10 years and it becomes mainstream. So there's some cool stuff out there, but I think my obsession's not with living forever, it's living well. And I think that's more important. I've got more energy, more focus, more, I've got the ability to do more stamina, endurance for everything than I did 10 years ago. And that's just because I optimize what I do.
Yeah, I'd actually agree with you there. Like, I think your biological age at the moment is like 34 and you're actually more like 40,
45.
45. Yeah, I'm 43. I wouldn't say I'm as low as you on the biological age, but I was pretty impressed when I saw it on the last couple of scans that I've got. But my own anecdotal evidence is, my waistline's better. My body fat percentage is way down. I can't believe how far it's down compared to when I was competing in CrossFit. Like, we're talking like 7% less. Yeah. Like crazy. My energy, I bounce out of bed, and I don't take things as hard, but I am kinder on myself now too. I don't hit alcohol as hard as I used to. I don't hit caffeine in the same way I used to.
I was a semi-professional athlete and I would train 3 times a day. And I now bench, lift, deadlift, chin-ups, everything well beyond what I could have done back then. Right? Like crazy. It's seriously like last week I'm in the gym and I'm about to do a test every 6 months, a strength test. And I'm putting a 30-kilo plate on, and they're like, "Oh, let's try and do 1 chin up with that." Yeah, and I'm doing 4.
Wow!
I came in here 2 years ago, I couldn't do a chin up.
Yeah.
Right? So feeling stronger, it's good for you, right? And eating better, I just remember back in the days before even InfoReady. We go out for a Palmer and chips at lunch, and then by 3 o'clock in the afternoon, we're like, "It's too hard."
Yeah,
right. Now it's like I'll have a salad at lunch and by 3 o'clock in the afternoon, I'm not going for coffee. I'm speeding my way through the rest of the day so I can leave at 4:30 instead of 5:30 and see the kids. And it works.
Brilliant. I love it. Well, you did talk about optimization. We talked a little bit about AI there. And, I think you and I are on a similar theme here that, AI feels a little bit like the internet in the mid to late 90s. And I see a lot of business owners that are kind of looking at it like, maybe it's going to turn into something, maybe it's not. But for someone that's in the world of like starting companies, investing in companies, leading companies, growing companies like you, with all the options you've got out there now and a tech background, what kind of tech investments are you looking at now?
Yeah, the not cool ones. That's amazing.
Thought it might be.
I've got it, the unsexy or the unfluffy pieces, right? Because AI, you can make $1 squillion if you get the right AI, large language model, right? And you could cure cancer through it or whatever. And there's going to be less than 1% of the entire population of the world, a fraction of a percent, that's ever going to come up with something like that, right? And it doesn't matter how smart you are and how good you are, even with the best ideas, your market's going to be it's hard to crack. So I say go and build everything that they all need to build their language models. So I look at the networking, I look at the infrastructure, I look at the hardware, I look at all this stuff, which is like really geeky tech stuff that's beyond what I used to do, right? I used to be a programmer, so it's going back in a stage beyond that. And, networks need a refresh now so frequently. Like, 5 years ago, 10 years ago, you'd refresh your network once every 5-10 years, right? Now with, just with the compute power that you need, you have to refresh it every 2 to 3 years.
Yeah.
So that's the area I'm getting into. I think that's really cool. I reckon it's the foundations of things. I think I said before, it's like building the concrete for the house, the concrete slab, and then just let people build on top of it. Yeah. Right. And you can just roll out slab after slab after slab, but who cares about the windows and all the stuff on top of it? You just got to get that core element right. So that's where I'm focusing on at the moment and investing. Because I think that's it's going to be critical. It's a critical infrastructure of technology.
Yeah.
Or of AI. Yeah.
Makes total sense. Build the quarry, don't build the houses.
I can't have a conversation more. I'd have probably 2 or 3 conversations a week with someone who's got, I've got this brilliant AI idea, right? Yeah. And I'm going to build it. And I'm like, yeah, great. Right. Yeah. Someone will make a lot of money out of it.
Yeah, I reckon you're right. Well, look, this has flown by in a flow zone kind of way. I'm gonna help our guests land on an absolute high on this at the moment. We've got the rapid fire. Okay, so I'm gonna start some sentences, and I reckon you're gonna finish them in your own awesome way, and it's your words, whatever it is. Ready? So
let's go for it.
Let's go. The difference between a $10 million business and a $100 million business is
culture.
Love it. Most entrepreneurs fail at turnarounds because
they don't talk to their customers.
Ooh, I like that. The hardest part of transitioning from founder to CEO is
managing your own ego.
Yeah, I reckon there's been a few founders that have had to eat some humble pie there.
Yeah.
I'm maybe in that gap there somewhere. Leaders who don't prioritize their health are
stupid. Probably about to die.
Probably about to die. AI will transform business in the next 5 years by
making everything faster.
The one habit that separates elite performance from everyone else is
trusting your team and not being afraid to fail.
Mate, there's some real words of wisdom there. Tristan, this has been fantastic. I really feel like we could do another 3 episodes on some of the deep dives that are available to us there. You're pretty big on LinkedIn, right? That's where you like people to connect with you. Yep. I really recommend all of our listeners and viewers jump on your LinkedIn. It's got some incredible stuff there. Very interested to watch your journey from here on in. And look, I will put a shameless plug in there. I am involved in a venture capital private equity outfit called PyLab Capital, and we have a serial acquirer fund that's wanting to buy more businesses in the $5 to $100 million sector at the moment. So if that's a business one of our listeners have got, like you've just heard about, there's been a good vouch for PE there, and I think the PyLab are quite similar. So feel free to reach out to me on that as well. Tristan, thanks very much for a great Flow Zone episode, mate. I look forward to watching your journey unfold.
It's been a lot of fun. Thank you.
Thank you.
Thanks for having me.